Welcome back to episode 18 of the $100 to $10,000 series, where I invest $100 every month to the S&P 500 index fund to show everyone that investing doesn't have to be difficult. This week, we're up 3.28%, and overall, we're up 25.38%. Tesla stock is still on a tear, as investor hype of the company continues to grow, and now Tesla's market cap is about $200 billion more valuable than Toyota's, which was the most valuable car company for a while. This rapid growth in the EV market has been possible in large part because lots of governments around the world are pushing towards a more sustainable future by providing policy support. For example, China has been providing subsidies to buyers of EVs and extended its plan as the pandemic lowered demand. And in the US, many states provide similar subsidies to incentivize purchasing an EV. And lots of other companies are trying to play catch up with Tesla in the EV market, with small companies like Rivian and large companies like BYD competing with Tesla in the international EV market. And so there are just so many car companies out there investing into the EV market right now that it's hard to pick who the winners will be in the long term. So today, I want to introduce companies that I think will benefit no matter who wins from the EV race. So far, fossil fuels have been used to power our vehicles for decades. But as EVs become more and more prevalent, we should pay attention to the new source of power: batteries. Most EVs today use a lot of different materials like nickel, cobalt, and graphite, but at the core of the technology is lithium. Lithium-ion battery has been a winner in the battery space so far because lithium offers lightweight but powerful electrochemical potential. So it allows the battery packs to be lightweight and compact, which are ideal characteristics for transportation applications. And China knows that lithium is critical to the battery and EV industry, so they have been investing heavily by taking control of large lithium projects. In 2019, China owned 73% of global lithium cell manufacturing capacity, with the US very far behind at only 12% of global capacity. So, I'm going to discuss 3 different investments today for companies that will benefit if the EV boom really does end up coming. The first is Albemarle, ticker symbol ALB. This company is actually a chemicals company and provides other products and services besides lithium. Their business can be divided up into 3 large categories: lithium, bromine specialties, and catalysts. Their largest revenue, unsurprisingly, came from lithium, making about 37%. One thing I really like about ALB and why I invested in this company is that they have a great history of paying dividends to shareholders. And last year, they were put in the S&P 500 Dividend Aristocrats category, which is a list of companies in the S&P 500 that raised its dividend for at least 25 years. There are obvious risks to the business too, because lithium is produced by other companies like China's Ganfeng Lithium. ALB won't be able to control the prices of its lithium products as they want. And if more new companies that want to mine lithium show up without the demand rising, then the price of lithium will drop. And ALB projects that the strength of EVs will not be as strong as pre-COVID projections, but they still expect slower growth of 500,000 vehicles in 2020 and a faster growth in 2021. The next company that I want to share with you guys is Lithium Americas Corp. This stock has been performing great in the past year, with shares rising over 125%. But if you were to look at the numbers for this company, you may be taken aback because they're absolutely horrendous, with revenues of negative $1.84 million and a net margin of negative 2,000%. So what's so great about this stock? Well, Lithium Americas is one of the rare public companies that haven't started their operations yet. They are in the process of starting 2 lithium projects, one in Argentina and one in Nevada. The project in Argentina is about 45% complete at the time of recording, and they expect to complete construction in early 2021. The promising thing about the project in Argentina is that Ganfeng, which is one of the leading lithium companies in the world, has invested a 51% stake in the Argentina project. So when you have one of the leaders in the industry invest heavily into an early stage project like this one, it shows signs of promise. And according to Lithium Americas, the net present value, abbreviated as NPV, is between $1.3 billion and $1.8 billion. And the market cap of LAC is sitting at around $629 million. So if this project proves to be successful, then there is a lot of gains to be had. Now, we can't be certain that what the company projects is going to be 100% accurate, and there are a lot of variables at play. For example, the construction of the plant in Argentina was delayed because of COVID when one of their workers got sick with the virus. And since the company is not making any profit right now, they may have to lean on more investments from companies like Ganfeng, which would lower LAC's stake in the project. But there is of course another project in the works for Lithium Americas, and that project is actually going to take place in the heart of what people have been calling the Lithium Valley in Nevada. One of the reasons why Tesla has built one of their gigafactories in Nevada is because Nevada is home to one of the largest lithium deposits in North America. And so the current net present value of this project is between $2.6 billion and $3.9 billion, which is about 2 times larger than the project in Argentina. And so far, Lithium Americas has 100% ownership of the project. So if this project does provide successful, Lithium Americas will be able to take most of its profits home. The one thing to note about this project in Nevada is that it hasn't started construction yet, and they plan to start the phase 1 of their construction in the middle of 2021. So one of the large risks I see with investing in this company is that none of their project is complete, and that they are running out of cash to invest into their projects. So they may have to give up some of their rights to both of their projects to get them complete. And there are just so many variables that can go wrong, like they may adjust their estimates for production. So if you do decide to invest in this company, make sure you do your in-depth research, as there are significant risks with investing in a company that hasn't started their operations yet. And if you are more risk averse and you want to invest in a more diversified asset, there is an ETF just for that. This ETF has been performing great in the past several years, with shares rising over 350% in the last 5 years. And in its portfolio includes companies that we have mentioned throughout the video, like ALB, Ganfeng, and Tesla. And it does pay a dividend too, although pretty small at 0.82% yield, and its dividends are not very consistent. And so this ETF is probably not very appealing to a lot of income investors. Although, if companies like Tesla start paying a dividend, then investors in this ETF will probably reap some benefits as well. That's going to do it for this video. Please don't forget to subscribe with the bell notification icon turned on, and I will see you guys in the next one.